Okay, everybody, it is me again. And my eye still hurts. Don't flick yourself in the freaking eye. At least don't do it on purpose. Anyway, yeah. So Thursday, March 17, 2022, people, let's talk. Market's a freak show. The whole environment is a freak show. But let's put a little light on that. Instead of starting off with the stock market like I usually do, let's talk about economic news. Well, apparently we got some good economic news today, and let's go over that. So unemployment claims for last week came in at 214,000. Apparently this is a great number. Housing starts came in higher than expected. However, building permits have fallen. All right, whatever. They're telling me that's a good thing. Whatever you think. Factory activity apparently came in better than expected. That's great, right? Okay. Now here's the ugly part of this whole thing. So housing affordability today is the worst on record. Well, let's consider the fact that the Federal Reserve is buying mortgage-backed securities like there is no tomorrow. What is this doing? Obviously supplying artificial demand for the market, and you're seeing housing prices surge. They are so concerned about inflation, though. You know that. As a matter of fact, yesterday, let's just recap real quick. They went out of their way to raise the federal funds rate 1/4%. Wow. I mean, that's astonishing to me, where we have inflation at like 8% today, according to their numbers. How does that work? Maybe one of you want to tell me how that freaking works. Okay. What else is going on today? Bloomberg, at least this morning, I'm watching Bloomberg, and they're pushing the food and energy crisis narrative yet again, and it can be really severe. Whether or not that happens, energy is already out of control. Are you watching crude oil this morning? Crude oil, right now as I am doing this, is surging. It's 5% higher. And it's going much higher. So yes, an energy crisis, there's no doubt about it. We are in it. It's going to get a lot worse. Food, they're talking about supply chains. They're also blaming inflation, not on central banks, this is Bloomberg, but on the war. It's the war. Meanwhile, inflation was surging before the war. But they think you're too stupid to know that. But I happen to know that you're not stupid at all. You're very, very sharp, and you're on top of this. Believe me, I read the comments. And you guys and you girls, my lions, my lionesses, you're amazing, all of you. All right, let us move forward. Let's talk about this market. So I already told you about crude oil surging. It's over 5% higher. Silver catching a very nice bid, 3% higher. Gold is higher right now. Bitcoin over 41,000, looking really, really good. You got stock futures right now in the red a little bit, but look, yesterday, nice rally on Wall Street. Day before that, nice rally on Wall Street. The Dow put on like 1,000 points in the last 2 days. So, maybe we'll get a little drop today. I don't know. Let's look over at the debt market. 10-year yield above 2%. Very pretty. Lovely. Dollar lower this morning. So the setup for the market's not bad. You got crude oil catching a bid. You got the 10-year yield above 2%. A weaker dollar. Yeah, stock futures are lower, but apparently we got some great economic news, and they don't care. Believe me, if people cannot afford to buy a home anymore, no one cares. You and I care, but the powers that be could not care less. As a matter of fact, they're going out of their way to keep the pressure on everyone. And as you are all well aware of, the Fed isn't concerned about inflation at all. Where's the proof? They raised the federal funds rate 0.25% yesterday. They still are buying mortgage-backed securities. They're still suppressing rates, and they're not going to stop. And maybe, this was the big one yesterday, maybe at one point in the future, they're going to talk about unwinding the balance sheet. I think that won't happen. But, look, it's a freak show, and I think, honestly, you are well aware that the Fed's balance sheet is going to balloon. Absolutely balloon from here. Central banks around the world have no intention to stop the mechanism, and that is to continue to buy assets, to flood the world with debt, and squeeze as many people as they can into the lower rung of society. Globally, people, we are marching. We're in it right now. The two-tier society, the extreme haves, extreme have-nots. I have warned would happen for years and years. It is accelerating. I think you all know that. But anyway, that's the story. So in summary here, we got some great economic news. According to the mainstream propaganda ministries, unemployment claims looking real good. Only 214,000 last week. Housing starts looking good. But buildings permits fell. I want to know how that works. Factory activity higher. Let's not forget about that. But housing affordability is the worst on record. Lovely. And it's about to get a lot worse. So look, let's watch the game. Let's see how it plays out here. Keep your eyes on crude, gold and silver right now. They're going to probably smack it down at one point because there's no price discovery mechanism here. It's all fake. When you can pull the hard asset around via the derivative, have an upside down system, until that is fixed, you're going to see rigging in the precious metals market off the Richter scale. And just be ready for it. And as I always say, embrace it. Hug it. Love it. Because we're going to continue to bet against the freaking debt, become our own central banks, because global debt is poised to hyper balloon faster than we have ever seen before. And you, my lovely friends, want to be on the opposite side of that trade. All right, with that said, people, I'm out of here. Love all of you. Please share the video. I will see you in, post-market. It's going to be lovely.